So people ask all the time, what should I pay for a business or what should I sell my business for? This is about businesses that are under that $1 million in gross revenues. We do a lot of valuations for companies and work with many that are in the 2, 3, 5, 10, 15, $20 million. But occasionally we get people calling in saying, what do I do with my pizza restaurant, et cetera, and how do I value it, or how do I pay the right price if I'm going to buy it? There are two numbers that people look at a lot of times when they talk about the profit of a business. One is the seller's discretion or discretionary earnings, and that's the amount of money that a person can take out of the business if they're going to work in it full time, managing it. The other one is the EBITDA, or the money that they're going to take out of the business if they're going to pay a manager to run it. Maybe somebody's going to buy multiple pizza restaurants, as an example. Okay, there's a formula for that. And so looking at the money that it made on the taxes, adding back non-reoccurring expenses. Maybe they did a remodel of the front sales room for $50,000 and they haven't done it in 20 years. It's not going to happen every year. Non-recurring income might be the money that they got from something like when BP oil spill made the impact, and they all gave businesses in certain areas some money back. Non-operating expenses and non-operating income are sort of like the other ones, only a non-operating expense might be paying a spouse some money who doesn't work in the business, but they like to get the income. A non-operating income might be some rental property nearby that the new buyer is not going to be able to capitalize on. There's depreciation, amortization, and interest. Go to the internet if you want to know what those are in more details, and of course what the owner pays themselves. So as the example here, imagine this pizza shop made $375,000 and their cost of goods sold was about $135,000. That left them with $240,000, and they paid themselves $45,000, paid the labor $75,000, paid rent of this much, had interest, depreciation, amortization, sports car, and a few other things. And it looks like on their taxes, they only made $25,000. But they said, but wait a second, don't forget, I paid myself $45,000. You get that too. And you're like, okay. And then there's the interest expense, and they say, well, you get that too. And this depreciation is just a tax number. It writes it off on there, and amortization is like depreciation, only it's about intangible stuff. And then there's a sports car that I use and I write off, but I don't need that for the business out there. So instead of $25,000, it looks more like $100,000. One of my favorite resources of looking at sold businesses that are similar to get an idea of what the business might somewhat sell for is a company called Peer Comps. They do a lot of valuations for SBA loans, and their data tends to be pretty crisp, clear, and good. But always check multiple resources, do a lot of research, always hire an accountant, always hire an attorney, always hire a valuation expert, somebody who really knows what they're doing. And I always recommend that you work with a professional business intermediary. Nonetheless, this gives you a ballpark idea of how to look at your business. Remember, talking about it, seller's discretionary earnings. That's that line right here, multiple of SDE. This is based on 270 transactions, that the cheapest one sold for a minimum of 1.04 times what? Times that seller's discretionary earnings. That was $100,000 on that last page. So that means that this would sell for $100,000 and $104,000. Okay, the most expensive one was 5.5 times that $100,000, which means that it sold for $551,000. But in between all those are the averages and the middle number, or the median number, which, if you remember that maybe from statistics, means the number in the middle of a whole long list. And this sort of allows you to get rid of outliers that might throw things off on either end of the spectrum to get a good idea. But these numbers are pretty close in this particular case. Okay, so remember $100,000, you'd multiply 100,000 times 2.75, and then one of the numbers that you might begin to look at is 100 times 2.75 or $275,000 or $272,000. You might say, well, my business is better than average, and here's the reasons: the sales are going up, and I can take 6 weeks vacation, and I'm not tied to the business, or all these different factors. So these are just general groundwork ideas. On the other hand, if you as the owner or the seller is saying, hey, I want $800,000 for my business, no other business is sold for any over 5.51 on this database, unless real estate's tied to it or something we're not looking at. You begin to think, oh, there's kind of something funny with that. It's ultimately what the market's going to decide. The willing buyer and the willing seller have to agree to these numbers, and they're more likely going to be somewhere near the realm of these, and certainly usually within these two factors out there. Other databases exist. In Florida, there is the Business Brokers Florida, and they combine that, and this shows a little bit lower an average of 1.8 times earnings. Nonetheless, it's important to have a big variety of information businesses and do your best to try and align the business sample with the existing. So that's one reason I like peer comps quite a bit, but you don't have to use that. You can use other ones out there. Always hire a professional attorney, accountant, valuation specialist, and get a great intermediary or business broker to help you in your process. Good luck. Thank you very much. Bye-bye. Hope this helps.